Hey everyone, Retire on Dividends here. It's been a while, but I figured let me dig into ULTY and see what the hell they're doing. Obviously, they made some updates on their prospectus, and every time I look at it, I'm like, oh, so it's just a lot to cover. But I did kind of a deep dive, and I could show you what's going on. So first, for those of you new to the channel or new to YieldMax or new to ULTY, if you go to the YieldMaxETFs.com website, they have various ETFs. ULTY is under Ultra ETFs. It's actually the only Ultra ETF at the moment. Hopefully they do add more in the future, but if you click ULTY, obviously it'll pull ULTY up. And you can see kind of, some information about it. Right now it shows a 107 distribution yield. They kind of, their payments have been going down over time, but that's because the fund has been going down over time. But as mentioned before, they recently changed their prospectus, which I can show you real quick. If you go to the bottom under documents or literature, I should say, if you click the prospectus, it'll actually show you the updated prospectus is there, dated October 15th. I'm not going to go through that. I did cover that in another video, so go check that out. But this video is really just to talk about their current holdings and what they're currently doing. But before we get there, some history about ULTY. They incepted February 28th of this year. Obviously, their ticker is ULTY. Their expense ratio, though, is 1.24%. So that's a little more. Oh, I'm sorry. That's their gross expense ratio. Minus the waiver, it's 1.14%. So it's a little more expensive than the covered call ETFs, but you may believe that it's worth it, right? All right. So total net assets in this fund, 208 million total, which is not bad. Obviously, it's not NVIDIA status, but it's getting there. And then you could see here the intraday trade download button. Nothing will come up on that because obviously the market's closed as I'm making this video. And then you can click download all holdings to see where we stand on the current holdings. And then there's other literature and then blah, blah, blah down here. So anyway, I downloaded the holdings into an Excel spreadsheet, as you can guess. So let's go through them. All right. So again, this is a lot. So bear with me. And since it's a lot, if you don't mind and you enjoy this content, please hit the like button. It does go a long way. Also, if you want to help the channel even more, feel free to share this with your friends and family. All right, so here's ULTY, right? ULTY as of 10/28. Again, this is over the weekend, but it's always going to show the Monday's date or whatever the next trading day is, which is typically the Monday unless it's a holiday. So these are the holdings as of Monday, October 28th. So from the top down, you could see, the tickers, the third, well, let's go from column to column. The data is obviously the data of the holdings. Account is just going to show ULTY, which is their ticker. And then stock ticker is the actual tickers that they're holding. If you see a ticker and then a bunch of numbers and letters, that's an options contract, okay? And then you have QSIP, which is also, it kind of represents like a contract number, security name, same thing, a lot of kind of repetitiveness. Shares represents shares or number of contracts, and then price represents, the price of either the ticker that they own or the current value of the options contract per share. Market value is what the total. For example, AMC SC, they have how many? 325,000 shares. They're worth $22.93, so obviously multiply the two, you get the market value, which then it shows the percent weightings of the fund it is, the total net assets of the fund, which again, that's the assets under management, how many shares, creation units, money market flag, which is kind of useless. It's for the bonds, treasuries, whatever. And then from column N on, this is where I put in my stuff, okay? So now we'll talk about some information that I believe is important. So ticker symbol AMSC is the underlying name is American Superconductor Corporation. They have an implied volatility of 100.84%. Yes, that is insane. Insane. Again, 100% volatility. Awesome. I don't know this company, so I don't know if they're worth a crap, but they do have good volatility. I also added the current underlying price. It shows what, 22.93. Actually, let's see what they show. 22.93. Okay, at least that's in line. And then under transaction, this will show you whether it's a call, put, or nothing. If it's nothing, obviously they're just holding the underlying. And ULTY is different because you'll notice on the covered call ETFs, they never own the underlying, right? Unless it's some fluke mistake where they had to own it for a day and then had to sell it. But they own synthetic shares essentially that mimics the movement of the underlying. ULTY, for the most part, I'm not going to say always, but for the most part, they own the underlying and they sell options on it. So in the case of AMSC, they own the shares and now they're selling calls on them. All right. So if you want to see how many shares they own, we just talked about it, right? So they own 325,000 shares. So they're able to do 3,250 contracts. Why? Because you need 100 shares per contract. So basically slice off 2 zeros, and that's the maximum amount of contracts you can trade. And that's what they are trading. All right, so they're doing a covered call. Again, I'm just looking at rows 2 and 3. It has an expiration date of November 15th. That's coming up soon, less than a month. Strike price is $27. That is currently 17.75% out of the money. So obviously, they're doing well with this. They have a lot of room, 17% worth, and I don't know what it opened at, but so the stock could have tanked for all we know. But either way, it looks like they may win this transaction. And then I have the 52-week high and low of the fund, so you can see how high it goes. 32 is the high, and they're currently closer to the 52-week high for what that's worth. But we can cover that part at the end. All right, so that was AMSC, and then we'll keep going down. Next is CLMT. This is Calumet, 86% implied volatility. That's good. Their current price is $21.18. They have a covered call for $23. That expires November 15th. That's 8.59% out of the money. Again, they have about 20 or so trading days left until that expires. We'll see how it works out. Coin, all right, obviously they own Coinbase. Coinbase has an implied volatility of 86%. Coin's price is $205. They have a covered call at $200. Unfortunately, that's 2.46% in the money. So, that expires 11/1 actually. So this one, it expires on Friday. So we kind of need Coin to go down for them to win this trade right here. If not, they will most likely cash settle and not let their shares get sold. Again, but it's ULTY. I believe they have the flexibility to do what they please. All right, let's move on. Next is Enphase. That's ticker symbol ENPH. What do they got? They got implied volatility, 66%. Their current price is $83.83. They have a covered call of $83. Which is 0.99% in the money, and that also expires this Friday. So not looking good for them either. All right, let's move on. All right, we got him, hers. So for the highlighted lines, I'm just highlighting it because it is a little different, and I'll show you that in a second. I wonder why stock ticker. Let me see if I could expand that. If I click that, no. Yeah, it's going to be cut off because this is the way it was set up. I think we'll be fine though. All right, so we'll look at him and hers Health Inc. Okay, 99% implied volatility. Nice. All right, so their underlying price is $21.73. All right, so do they? They don't own shares, right? They don't own shares. They don't own physical shares here. As you can see, it's just basically, what do they got? They got just so you guys know, if it's a sell call, right, position, it would be a negative under market value. If it's a buy call position, that means they bought a call, it would be a positive value. Because when they buy a call, it can't be worth negative value, right? It's only going to be worth money all the way down to zero. It's not going to go under zero. And on the flip side, when they sell a call, right? When they sell a call, that is going to cost money to close, all the way down to 1 penny, at the cheapest. So what did they do here, right? You see the positive market value? The positive market value is the green row. They bought a call, $18 strike, 3,600 contracts, and they sold a call, $24 strike. Where is it? So, yeah, 3,600 contracts. So the same number of contracts. They do not have to own the shares because the synthetics, essentially, it is the buy call, right? So they have the buy call, which they can use to sell calls on, all right? So that's why they do not have to physically own the shares. And again, this is part of kind of ULTY doing its thing. So if we look, I did actually put the name. So this is what they call, again, bull call spread. I'm calling it bull call spread from now on, right? But obviously, we know how it goes. But this is a bull call spread, right? Why? Because they bought a call with a strike price lower than the strike price of the sold call, kind of opposite of what we see on the covered call ETFs. Those are bear call spreads. Okay, now, so what do we need? What is happening here? How are they doing? Well, the underlying price is at 21.73. So if they bought a call at 18, it's above 18. So obviously it's profitable. The market value, 1.5 million. That's doing good. All right, and that expires. This says November, it's November 8th. It's cut off under column C, but you could see it's November 8th. My expiration date got screwed up because some of the fields aren't the same as the others. So November 8th, this is not this Friday, it's the following Friday. So that's good. Both are obviously at same expiration date. So it's above the 18 and it's below the 24, right? Because they're at 21 bucks. So their sold call is 10% out of the money still. 10%. So this is perfect, right? If it goes above, the sold call price, obviously they're going to lose out and they'll have to cash settle. But, they're already going to gain $6, right? Because they bought a call at 18, $6 per share in gains. Anything above the 24, they'll lose out on, right? But so far they're in the middle, which is perfect. That's like the sweet spot right there. But anyway, as mentioned, that's called a bull call spread. So we haven't seen that in any of the other funds. We see it in ULTY because ULTY, they got no babysitter. Then no one's watching them. They're like, I'm doing whatever the hell I want. And that is the beauty about ULTY. ULTY's like the bad kid, right? The bad kid who does, nobody cares. Nobody's going to say nothing to ULTY, right? All right, so let's talk about Labu. Labu is next up. So they have an 85% IV. Their current underlying price, the current price of Labu is $120.47. They have a strike price of $125 that expires this Friday. So that's 3.76% out of the money. Little tight, but we'll see how it goes. So, it's better than in the money. Mara, okay, 111%. Wow, 111% IV. That's insane. The underlying price of Mara, 1706. Their strike price is 1950. This expires on Friday, and they're 14% out of the money. So that looks pretty damn good. Next up, our favorite MSTR. Woohoo! 101% IV. All right, what do we got here? See, I love having more Misty exposure in ULTY because Misty's obviously doing really good. This one, actually, they have many transactions. I didn't, all right, so, all right, yeah, they own, it looks like they own MSTR, and they do have scattered strikes. They sold calls at various strikes. So ULTY is scattering the strikes within. I love it. All right, so MSTR's price is currently $234. They have a strike price of $230, $235, and $250. And the beauty of scattered strikes is one's in the money, one's essentially at the money, one's out of the money. So if they went all in 230, they'd have been screwed. They're in the money. They'd have to cash settle the difference, but they're not. All right, let's check out the number of contracts. Let's see which one's the heaviest. 450 on the top, 150 in the middle, 450 on the bottom. All right, that's a good mixture right there. So they're doing, pretty good right now. If MSTR kind of stays flat and goes down for the expiration date of Friday, then they could possibly get a win on all of them. But right now, it's an overall win, it looks like, but we'll see how it goes. But I love the trades. Honestly, I did not see this when I didn't like examine it to hell. I just kind of put it the important notes before the video. And that way I can kind of review the trades with you guys, firsthand. So that was the first time I saw the scattered strike. So I am very, very impressed with that. All right, next up is Novavax, ticker symbol NVAX. They have a 110% implied volatility. Their price is $9.74. They have a call that expires not on November 8th, next Friday, not this Friday, next Friday. 11.50 strike, 18% out of the money. All right, that looks pretty good, but we'll see. With the high V, what was the IV again? Yeah, 110%. I mean, that could move, man. You never know. All right, next up is NVIDIA. Again, another favorite. They got, what do they got? They got two calls. Oh, no, I highlighted pink, so they got, this one's a little different. So NVIDIA has a 60% IV. They own, let's see how many shares they own. 84,000 shares. So what do they do here in pink? Let's take a look. Bear call spread. So this is what we're used to on the covered call ETFs. So what do they do? If we go over here to the left, I'm not trying to make you guys dizzy, but I'm trying to cover the important pieces. So if you look under security name, okay, so they have again the 84,000 shares. Take off 2 zeros. That's how many contracts they can do, and that's what they did. All right, so they sold a call at 148 and they bought a call at 155. So again, this is the bear call spread, right? So they essentially want NVIDIA to stay under 148, right? And that's a win. The dead zone, which they don't want it in, is 148 to 155. But if it blows through the 155, that'll offset the damage from there on out. So let's take a look how much NVIDIA is worth right now. Currently, it's worth 141, which is under the strike price of 148 by 4.56%. The expiration date on this is 11/1 if you look at column C. So that's good because that's this Friday. So right now, that's looking good. I like it. All right, let's move on. RDFN, Redfin, 99% implied volatility. All right, this is just a regular transaction here, $9.99. They own the fund. They're selling a covered call, $11 strike, which is 10% out of the money. Expiration date is for Friday. So that looks pretty good. We'll see how that plays out. Next up, SATs, right? SATs, like the test. Anyway, SATs, are they allowed to use that acronym? All right, their IV is 75%. EchoStar Corp is the name. Where do they get that out of SATs? Anyway, the underlying price is $25.13. The strike price they got is $28. That's 11% out of the money. This expires November 15th, though. So that's not this Friday. That's not next Friday. That's the Friday after that. So they got some time on SATs. Holy crap. What in the hell? SAVA, ticker symbol SAVA, 316% implied volatility. Danger. Oh my God. Cassava Sciences. Who in the hell are you? Oh my God. Let's underlying IV. I love it though. Such a degenerate play here. 26.55. Strike price 30.50. 14% out of the money. Noise. This expires on 11/1 this Friday. So that one looks to be, I'm not even going to say it looks to be safe with a 316% IV. That thing could fly high. I wonder why it's so high. I guess it's maybe it's like GameStop. I don't know. Anyway, next up, oh, my hand is getting sore holding the phone. Next up is SG, Sweet Green, 99%. Have you guys heard of these companies? Or am I just like out of the loop? 99% IV, underlying price, $37.48. Wait, what the hell? That's, okay, that expiration date, oh, it cut off the, looks like it cut off the November. So obviously I'm automating formulas here and it's kind of cutting off at the wrong spot, but some of these columns are not consistent, and which is annoying, but that is not an expiration date of January 15th. It's an 11/15. So that's okay. That's close. It's coming up. Strike price is $39, 4% out of the money. Is that safe? Doubt. I mean, it's never safe with that high IV. Up next, ticker symbol SMR, New Scale Power Corp. All right. They got a pink. They got a special highlight here. Let's see what they're doing. Actually, let's go over here if they have a special highlight to see. We can break it down real quick. All right, so they got 500,000 shares. Again, cut off 2 zeros. That's the number of contracts they can use. So if you look right below that, yes, they're using all their contracts. What are they doing? Okay, they have a call, right? 1850. Market value shows negative. So that means they sold a call for 1850. And right below that, they have a positive, right? So when you see a positive, that's going to be a buy. So they bought a put for $14. So they sold a call and they bought a put. And the name for that over here is a collar. I know, I'm dangerous now. I mean, at least this is what I looked up. It's a collar. I don't do these type of options. I keep options trading to the very basic. But I had to do some research before you guys yell at me and say, that's a collar. So here you go. It's a freaking collar, right? So what's a collar? It's when they sell a call for, I guess, a strike price above the put that they buy. So they buy a put for $14 and they sold a call for $18.50. All right. So this kind of protects the downside. They sold a call. They don't want it to go above $18.50, but in case it goes down too far, again, 14, anything below 14 they don't have to worry about, right? It's not going to tank too bad, but this is like downside protection. People always say on the other covered call ETFs, they want them to buy puts to hedge the funds, right? Because it acts as a hedge in case it does go downwards. Now, so this is an interesting play, and I'm wondering, again, why they do it on this versus the others. This is the part of why I invest in ULTY, because I don't try to time the market. I'm not good at timing the market. I don't want to time the market, but I will pay someone who keeps an eye on the market and can make plays to the best of their ability to protect the investment. So that's why I invest in ULTY, for exactly this. This has an expiration date of 11/1. All right, so what's the price though? The underlying price is at 18. All right, so the sold call is at 1850. All right, so the underlying price is at 1841. It's just under. This expires this Friday, so if it stays under that, then they're good, right? Obviously, if it goes above the 1850, that'll suck. They'll lose money. But if it stays below the 1850, then they'll make money. And by the way, when they do these collars, typically the credit from the sold call should exceed the purchase of the buy put. So that way, in the end, they're actually still getting a net credit, right? The put is just for the protection side. All right, I hope I explained that well. Again, I'm no options guru. People think I'm like an options, I'm supposed to be some options expert, which I am not. All I do is the wheel. All I want to do is the wheel. All I have time for is the wheel. That's why I don't talk about anything beyond the wheel. But again, when I talk about ULTY now, unfortunately, I have to, go into the deep end, right? I have to be brave and say such terms as collar. This is probably the first time I even said the word collar on a YouTube video. It's all for you guys. Anyway, the next one is TLN. That is ticker, the underlying is a Tailing Energy Corp, 73% IV. Their underlying price is $181.25. What are they doing? Holy crap. They do not own any shares. They're just doing puts. Okay, so what are they doing? Well, let's take a look. So you see let's go right to the negative. That's a sold put on the bottom, 175 strike, and then a buy put for 155. What is the name for this? Well, if you go to the right, I added it for you. That is a bull put spread, right? So again, the sold put, where is it? Here we go. They sold a put at 175 and they bought a put at 155. So they're bullish, right? If they sell a put, they're bullish. They want it to go above 175. So they don't have to buy the shares at 175 when it's under 175. Now, if it does go below 155, then obviously they are covered there, for that downside. So hopefully if we go over here, the price is over 175, and it is. It's at 181.25, and that expires, well, not this Friday, but the following. So this could be in a good position. All right, I like to see that. I know this is a lot, guys. This is a longer video than I planned. It's freaking Sunday, late afternoon. I just fixed my sink. It was dripping. Had to go to Home Depot twice, and I got it done. Bam! And I still got this freaking ULTY video out. All right, TNA, one of my favorite funds. Ticker symbol, obviously TNA. This is 3x of the Russell. It moves what the Russell does 3 times. Their IV is 82%. Their current underlying price, $42.56. They have a strike price of $46. That's 8% out of the money, and that expires this Friday. So that's a good trade right there. Pro Shares, QQQ, that is TQQQ. This is 3x of the Qs. Another great fund, 62% IV. A little more unaffordable for me because you can see it's $74. All right, so $74 currently. The strike price they got is $74.50. They're 0.32% in the money, not in a good spot. That expires this Friday, so you kind of need Qs to come down a little bit for this week. Oh boy, I'm scared to see Teslas. All right, they got Tesla. Of course they do. Why not, right? They own Tesla. Ticker symbol TSLA. I know I don't have to say that. Tesla has a 57% IV. The current underlying price, oh my God, it's insane. 269. It's hard to even say that. It's at 269.19. Expiration date is 11/1 for this one, and the strike unfortunately is 260. It's not terrible, but it's not great. That's 3.41% in the money. So hopefully Tesla has a sell-off this week. People take their profits, and maybe we can win that trade. Next up is ticker U for Unity Software. They have an implied volatility of 80%. Their underlying price is $19.72. They have a strike price of $23. That is 16.63% out of the money. That expires not this Friday, but next Friday, November 8th. That looks like it may be okay. But again, not all of these, but a lot of these have such high IV that it's pretty insane. That there's really no safe ones. I don't know. The index ones, I guess, are kind of safe, but even those are triple leveraged. All right, up next is ticker UPST. This is called Upstart Holdings. This has an implied volatility of 110%. The underlying price of this is $50.58. They have a strike price of $54 that expires this Friday, and that's 6.76% out of the money. So that's looking good. All right, so Vikings Therapeutics, ticker symbol VKTX. That's an ugly ticker, man. Victix, that's no fun saying. The implied volatility, absolutely insane, 102%. All right, let's take a look at the current price, $78, $78.03 to be exact. They have an $80 strike that expires this Friday, 2.52% out of the money. Is that safe? Not really, but we'll see how it plays out. And last but not least, ticker symbol VRT. This is for Vertiv Holdings Co. Lower IV than most, 53%. So is that the lowest? That might be the lowest of the bunch. Tesla's second lowest. Yeah, so I guess IV-wise, this is the safest fund. All right, their current underlying is 112.17. And what are they doing? I highlighted all 3 green. Oh, this was a weird one. So again, we have to look at the negative market value, or negative shares, and that means it's a sell, right? So they sold a call 1,000 contracts, right? And then they did a buy call 105 and a buy call 125. So they did a buy call at 105, a sell call at 115, and a buy call at 125. So this is, again, an interesting play. I couldn't find a name for this. So if you guys have a name for this, let me know. I'm calling it the bull bear call spread. Again, I'm putting the top one is the bull call spread. The bottom is the bear call spread. But they're doing this together with the same shares, essentially, even though they don't own the shares. But I'm calling it a bull bear call spread. Is that such a thing? Or is there a fancier name for that? So they're going both ways. And I guess, again, I don't know how much they made on the upfront trade, but hopefully they did well. We shall see. Obviously, if you look at the current market value, it's worth, obviously if they close today, it's worth a decent amount, but we'll see. So let's look how it's doing. $112.17. That's the current price of the underlying. Again, the middle is the sell call, right? The 115 is the sell. Yes. All right, so right now the 115, it's 2.52% out of the money. So that's doing okay. That expires this Friday, so that could be good. And the buy call above it, 105, that's making money. The 125, not so much, because again, that's 11% away from making money. But at the same time, you kind of don't want it to go in between there, right? Because look at the gaps. The buy call 105, they start making money over 105. Okay? They start losing money from that above the 115. So the sweet spot is between the 105 and the 115, and that's where they're at right now. They're in the sweet spot. Once it goes above, what is it? Above the 115 up to the 125. I think what's the worst case here? The worst case here, if it closes just below the 125, I believe, actually, and then they kind of close out zero. But there's a lot of possibilities of making money with this trade. This is an interesting trade. Let me know what you guys think of this and what the name of it is. I know you options nerds have special names for everything, so let me know. All right. As far as out of the money, even with the false, it worked. But the average percent out of the money overall is 6.2%. I guess that's okay considering it's ULTY. But I just thought this was worth it to go over. Also, some other things. Their average implied volatility for all of them is very high. It's higher than what it's been. It's 97.14%. So ULTY fund manager, he got balls lately. He's nuts. He's doing, you see it, man. Look at all what they're doing. You guys have time to do trades like that? I don't. I have time to do the wheel. The wheel is some basic crap in the options world, right? This stuff, a lot of it's a little too much for me. All right. And I can throw you an estimate too. So again, based on the current IV of 97.14%, you take that, you multiply it by the ULTY price of $9.95. Here's the formula. And then you divide it by 13, because again, they have 13 payments now, right? Not 12. And then you get 74 cents. So again, if the average, whatever the average IV is, that's typically what they'll strive for. Again, I'm assuming ULTY is the same, same idea as the other funds. So with a 97% IV, that's pretty damn good. We talked about the assets under management. This fund is about 208 million, which is pretty big. Again, there's a lot going on here, and I love ULTY. And I know people, they look at the price and they say ULTY shit because it kind of went down 50%. But again, I'm giving it a pass, and I'm giving it a fresh start as of the prospectus date of October 15th. And I just want to see, all right, I'll invest. What can you guys do? What can you do with my money? All right. Show me what you can do with my money. From what I see now on the trades, again, I'm not tracking the intraday trades. And if anyone wants to do that, please do that. There is an opportunity in YouTube land to do that. There's, if you want to create a channel about YieldMax, there's your thing. ULTY's it. I'll share your channel. Do it. I don't know if I can watch every video because ULTY's a lot. Not only to cover, but to listen to. But I can only, make these videos every so often, guys. I can't do this all the time, unfortunately. But maybe every 2 months. Again, I don't know. When time allows. Because obviously I already have my hands filled with many other videos. But I think covering ULTY is a must. You have to cover it because there's just so much going on. There's so much going on. But anyway, guys, as always, this is not financial advice. I am not a financial advisor. This video is for fun and entertainment. So hopefully you had fun. Hopefully you were entertained. If not, we will try again next time. If you have any questions, concerns, or comments on ULTY, please leave them down below. And if you enjoyed this video and you would like to see more of this, then let me know. Let me know that in the comments as well. Again, the frequency, I really don't know. But I'll do my damnedest to try to talk about it, as much as I can. Hopefully I did it justice. Again, ULTY is over my head now. What ULTY does is not my wheelhouse. My options, my options knowledge stays at the wheel. It doesn't really go above the wheel, right? So this is above and beyond the wheel, which is why, I'm glad, I'm happy to pay ULTY. Here you go, ULTY fund manager. You're the nerd that knows more about options than me. Now make me money, damn it. All right, guys, that's all I got for today. I just want to say thank you guys for watching and have a great day. Later.